VTI investing. This is not financial advice, but financial education. You've heard that if you have $100,000 to invest, it becomes easier and faster to grow wealth. But you don't have the $100,000 right now. Let me give you a stress free plan to get your first $100,000. In today's episode, I will explain how to invest in VTI. You will understand how VTI is tax efficient and other advantages of investing in VTI ETF. I will show you how to multiply your money from $1 to $100,000, and I will show you the exact calculations. I will tell you how long it will take to get your money from $1 to $100,000 and what to do if you want your profits earlier. I will mention the hidden or trading cost of VTI and explain how to invest in VTI. And I will answer the question on whether you can invest in VTI from anywhere in the world. Let's start. What is VTI in full? VTI stands for the Vanguard Total Stock Market ETF. But what does VTI mean in investing? So when you talk about the total stock market, it means VTI aims to mirror or hold or cover the entire US stock market. That is tens of hundreds of companies, big and small, right across different industries. ETF stands for Exchange Traded Fund, which is just like buying shares of a stock, but instead, you don't buy shares of a stock but of a company. So you own a tiny piece of many companies, okay? ETFs trade on stock exchanges throughout the day. So VTI is Vanguard's broadest US stock ETF because it covers the large, mid, and small cap stocks in one easy fund. Large cap, mid cap, and small cap refers to market capitalization structure. In simple terms, large cap are the large, well established companies. Then we have the mid-sized companies or medium-sized companies. And finally, the small-sized companies. And this depends on value and growth styles of each. Therefore, VTI, the Vanguard Total Stock Market ETF, gives you diversified exposure to the entire stock market because you have the big, the medium, and the small companies. As a beginner investor, why is VTI good? It's simple, it's low cost and straightforward. So it's a deal for beginners who want one fund to represent the US market. So how does Vanguard VTI work? But first, beginners can confuse mutual funds and ETFs. Is VTI a mutual fund or something else? No, VTI is not a mutual fund. VTI is an ETF. That means it trades on the stock exchange just like a regular share of a company. So you can buy or sell it throughout the day at market prices. This makes it more flexible than a mutual fund, which only trades once at the end of the day after the market closes. When you buy or sell mutual fund shares, the transaction occurs at the net asset value NAV calculated at the end of the trading day. You can also watch my video on VTSAX explained to understand how to make money from a mutual fund. So let's cover the expense ratio. What do we mean by expense ratio and what is the expense ratio of VTI? Expense ratio is the annual fee a fund charges and it is calculated as a percentage of an investment, okay? Remember, a lower expense ratio helps to return growth faster. So always check the expense ratio on your investment. VTI charges an expense ratio of 0.03% and this is very low. Think of it like paying 3 cents annually for every $100 you invest or $0.30 for every $1,000 you invest. So remember, it's the percentage you pay each year for Vanguard to run the fund. Okay. So besides the expense ratio of VTI, you may have the question: does VTI have any hidden trading costs? So you can consider the bid-ask spread. This is the small difference between what buyers are willing to pay, that is the bid, and what sellers are asking, the ask, okay? So remember, you can buy or sell VTI throughout the day at the market prices. So for VTI, it is usually just 1 cent, that is $0.01, because it is so liquid. But if you buy and sell often, it can add up. But for long-term investors, it's almost nothing. What kind of yields can I expect by investing in VTI? So does VTI pay dividends? Yes, VTI pays dividends every 3 months, that is quarterly. As a beginner investor, it's good to go for investments that pay dividends. What is the dividend yield of VTI? it is about 1.17%. But another way funds report yield is the 30-day ACC yield, okay? Which for VTI is about 1.16%. So let me explain what I mean so that you can understand. Imagine a lemonade stand that earns some money in 30 days. That will be the income. So you subtract the cost of sugar, the cost of cups, the cost of rent, which will stand for the fund expenses. So you divide that by the price of a lemonade cup at the end of 30 days. Pretend that 30-day income happens all year long. That gives you an annualized yield. That's what 30-day SEC SEC yield, okay, means. What you'd earn if it continued like those 30 days minus costs, okay? So what is the meaning of so SEC yield is calculated after considering the fees associated with the fund. It's like a fair starting point, okay? Same rule for all funds, and it shows you what you'd actually earn after paying the fund's bills. But using the SEC yield helps you to compare the earning power of different funds more cleanly. So what is the difference between dividend yield and SEC yield, okay? SEC yield. Dividend yield is more like history. It shows what you actually got paid last year, but it doesn't always factor in costs or current earnings, okay? The dividend yield just shows how much money the fund paid out in the past year from its profits. For example, the 5-year average return for VTI is about 14.6% per year, while the 10-year average return is approximately 13.1% per year. Therefore, if you are planning forward, you use the SEC yield. It's more current and standardized. It's like saying right now, if the fund keeps making money like it just did, this is what you'll earn after cost, okay? But if you're looking back, you use the dividend yield. It shows the past payouts. It's like saying here's what it actually paid in the last year, even if the future is different, okay? So you may be interested to know. So what stocks are VTI? What are VTI's top holdings and how big is Tesla in there? Just for information, yeah? And is Nvidia part of VTI, okay? Here's a snapshot of VTI top holdings as you see on the screen. That is by weight of the fund. So let's see who owns most of VTI and what are the largest holders of VTI as you see on the screen. We have Microsoft at approximately 6.1%. You also see Google at 1.71%. You see Tesla at 1.46%. You see Meta at 2.68%. You see Apple at 5.13%. So you can see who are the largest holders, okay? Are there alternatives to VTI? So there are other alternatives to VTI. VTI is not the only product. So what is the Charles Schwab equivalent of VTI? We have the Schwab US Broad Market ETF, SCHB. So both VTI and SCHB have volatilities of 2.98% and 2.93% respectively, okay? The BlackRock equivalent of VTI is the ITOT, and it is managed by BlackRock iShares. Remember, VTI is managed by Vanguard, okay? But both ITOT and VTI are considered high volume assets. So in a different episode, I will do a comparison of the Schwab US Broad Market ETF, SCHB, VTI, and ITOT. So remember to subscribe and like the video to get notifications when I post new episodes. In real life, nobody will ever ask you to give the definition of a particular word, but as they read the finance business or share the finance news or articles, they'll just use the words. So I got an excerpt from Yahoo Finance and I just want to share. This was from Yahoo Finance, August 2025. So it reads, bullish stock opened for trade at $90 near 1 p.m. Eastern Time on Wednesday. And the stock traded hands as high as $118 per share shortly after a more than 215% gain. The stock was halted for trade due to volatility at least twice within the first few minutes of trading. Okay. So, what is the volatility of VTI? Okay. You may want to answer the question, is now a good time to buy VTI or how volatile is VTI? So, first, volatility refers to how much the price moves up and down. Knowing volatility helps you understand how much your money might jump around. So you need to decide whether you'll stick the ride through the wobbles, okay? The up and down swings means some years might be great, you gain money. Other years you might lose money, even if you're holding VTI for the long run. So with a lower volatility of 5%, okay, if you are told the volatility is 5%, possible returns might range from negative 3% to positive 17%. But with a higher volatility, let's say of 20%, the range widens, it becomes bigger from negative 33% to positive 47%. That is for the same average return. So for VTI, the standard deviation over the past 10 years is around 16%, approximately 16%. So is VTI better than VOO? I want to answer this question by explaining it using the Sharpe ratio. Now you know volatility, I want to explain Sharpe ratio. So another way to see risk adjusted performance is the Sharpe ratio, which measures the return per unit of risk. Okay. For VTI, the 5-year Sharpe ratio is 0.82 and the 10-year is 0.71. Higher is generally better. So what is Sharpe ratio? Sharpe ratio measures how much extra reward or return you earn for the risk you take. So it's like getting more candy. Let me give you an example. It's like getting more candy for every scary drop on a roller coaster. So higher is generally better. Give you data as of 14th July 2025, the Sharpe ratio of VOO is 2.46. Okay. And so VOO provides slightly better risk adjusted returns than VTI. So note that VTI has a higher risk due to more volatile, smaller stocks. So using the information I've just given you about the volatility and the Sharpe ratio, now you can be confident to know or to answer the question, how long should I hold VTI? VTI is appropriate for investors who have a long-term investment horizon, okay? 10 years or longer. If you're seeking growth in capital as a primary objective, and you're also prepared to endure the sharp and sometimes prolonged declines in share prices that will occur from time to time when you invest in the stock market. So, you need to, when you're choosing an investment, you need to match it to your comfort level. If you will feel shaken by big swings, then go for an investment with a lower volatility. Okay, it might suit you better. Also, what are your plans? If you need your money in a short time, like for school or for a big purchase, volatility could make the value change a lot before you use it, because you may need to get your money, and the swing is on the lower side, okay? So which means you'll get less money. But remember, we also have other alternatives, as I've mentioned, including VOO, SPLV, SPHD, and bonds. I'll cover this in the coming episodes, beginning with VOO because I've been mentioning VOO, which is the Vanguard S&P 500 ETF, because it grows your money by owning just the 500 biggest, most stable US companies, unlike VTI, which also includes the smaller, more jumpy ones, as I had explained just at the beginning of the episode. So everything is connecting to one point, is connecting to another. That's why you need to understand the whole episode. So remember to like and subscribe so you can get notifications when I post the next video. And VOO is calmer because the big companies tend to wobble less when the market shakes. So before you take an independent decision or you consult with your financial advisor on whether or not to invest in VTI, you may want to know what is the historical performance of VTI. And note that past performance is not a guarantee of future returns. You just use past performance, the numbers, to estimate potential incomes, but you will never predict the exact results. Remember, everything, all these investments depend on the performance of the economy. But as of July 2025, VTI hit highs of $313, and that is what you can use to judge the performance of VTI. The 5-year average return of VTI is 15.86% per year. Okay, the 10-year average sits at 12.90% per year. So, and since inception in May 2001, VTI has delivered an annualized return of approximately 8.95%. That means on average, it grew by that percent, okay? 8.9% over that year period, okay? Over the years, okay? So now that you've understood the basics, you must be asking, how do I invest in VTI? But first, remember, when you are reading the documents, okay? you always check the as of date when you're using the charts. So, for example, the compound annual growth rate of VTI over the 20 years, as early of August 2025, it was 10.6%. You may hear a discussion like somebody may say VTI is underperforming. And just note that I've told you all these investments depend on the economy. So you need to check what is happening to answer the question, why is VTI underperforming? For example, the COVID crash saw VTI crash more because of the expected panic in smaller caps that are part of the VTI portfolio. Now you remember the smaller caps, okay? The small caps and the mid caps dragging VTI should be expected in panic sell-offs because of how they behave, okay? As we proceed, you'll get to understand why a particular fund may be more suited to you and your financial situation and planning. So you don't just make a blanket choice. So how to buy VTI? How do I buy VTI? You can buy VTI through any brokerage account. There's Vanguard, there's Fidelity, there's Schwab, there's Robinhood. I've just mentioned some top examples. So you just search for the ticker symbol VTI and place a trade. Remember, VTI is an ETF. It trades like a stock throughout the trading day. Once you've opened your brokerage account, whichever one we choose that you're comfortable with, but note that when you use Vanguard, at least you can access DRIP. I will explain DRIP. And also there are fractional Vanguard ETF options, okay? The second thing you have to do, you have to fund your settlement account or your cash account with enough money to cover the trade. If you are taxable, remember VTI is generally tax efficient, but it still pays dividends, okay? Which are taxable in the year received. So you can consider tax advantaged accounts. The IRA, the Roth when possible. So choose the right account according to your needs. So now you have your account. The next thing you need to do, number 3, is to search for the ticker VTI. Then you need to decide the order type. The market order means you will buy at the current price. If you choose market order, or if you choose a limit order, you set a particular price. You wait for price to come to you, okay? So use limit orders when markets are volatile. Now you understand volatility, okay? For beginners, a limit order close to the market price can help you to avoid large slippage. The next step is to decide the amount and the frequency, okay? You can buy a whole share or you can buy fractional shares if you go with brokers that offer the fractional shares. Like you can buy any dollar amount. So note that Vanguard allows dollar-based trades for Vanguard ETFs down to $1. That's why we are starting with $1, just $1 to start you off, okay? And you can check other brokers that have similar fractional programs. If you plan on dollar cost averaging, many brokers also support recurring buys. So now it's time to just automate your investment so that it is stress-free. So you can enable DRIP. If you want dividends to buy more fractional shares for you, you can enable that plan. So what does DRIP stand for? And does VTI allow for dividend reinvestment? DRIP, yes, VTI allows for dividend reinvestment. DRIP means dividend reinvestment plan. So it means that when VTI pays dividends, which it does quarterly, remember, instead of receiving cash, your account automatically uses that money to buy more shares or fractions of a share. So this helps you to grow your investment steadily over time without any extra effort. What is the minimum amount to invest in VTI? You can start with $1 because of Vanguard's dollar-based investing feature. Other brokers may require you to buy at least one full share unless they have the offer of fractional shares. Remember, a fractional share is just a part or portion of one share, and a fractional share lets you invest in any dollar amount, even if the share price is high. So just $1 is enough to start.